We all know the real estate market is experiencing a boom. Inventory is very low and unable to meet a growing demand. Some properties that come in the market sell in just a few days after receiving multiple offers, sometimes from buyers who are willing to pay over appraisal value so they can get the home. This has pushed prices up significantly, and some people are already starting to ask me if we might not be getting close to another bubble, or whether it might be better to wait to buy when prices come back down, when foreclosures start again. This is a valid concern. In fact, experts have been watching the markets closely at a national level, and this is what they have to say. They all agree that the market conditions today are not the same as the ones in 2007, and here's why. Factor number one, credit standards today are higher. Loose lending practices were the ones that ultimately brought down banking institutions back then. Since then, Congress made significant adjustments to the regulations of these institutions and how they're able to offer their lending products. Nowadays, my buyers must go through rigorous qualification processes to verify income and assets to be able to access a loan. Especially now during COVID, buyers must prove that they have a job stability, not only now, but through time. Factor number two, forbearance programs during the pandemic. In 2007, foreclosures flooded the market, creating too much supply and bringing prices down drastically. Now, during the pandemic, banks offered forbearance programs to homeowners, allowing them to postpone their mortgage payments for several months without incurring any penalties. Thanks to these programs, we haven't seen an increase in foreclosures. In fact, since 2020, some of these homeowners who took advantage of these programs already got their jobs back and started paying their mortgage again. So even though we might see a slight increase in foreclosures during the next 2 years, it's not going to be even close to the levels in 2007. In fact, by the end of 2020, the national delinquency rate was only 3.9%. Factor number three, homeowners have equity. Equity is that difference between the current market value of your house and what you owe for it to the bank. This equity is an incentive to save your house so that it doesn't go into foreclosure. Think about this. Back in 2007, we were getting loans for 100% of the value of the house, plus programs to help you with closing costs. Basically, some people bought a home without putting a cent out of their pocket. When prices came down and they ended up underwater, meaning they owed the bank maybe double what their house was worth, they didn't have an incentive to fight for it. In fact, it was easier for some of them to let it go and start fresh somewhere else. Today, homeowners have equity. Even if they can't keep paying for it, they can always sell it and make a profit. So believe me, they're not going to let the bank foreclose on it and let it go that easy because they have options. Factor number four, they expect property prices to slow down, but not to remain stagnant. The truth is, COVID left most of us spending a lot more time at home. That, combined with historically low interest rates, have motivated a lot of people to buy a home. Obviously, this is not going to last forever, especially because in some areas, prices are already a little bit too high for some families, and interest rates have slowly started to come back up. However, most experts, including the ones from Fannie Mae and Freddie Mac, all agree that prices in 2021 are not going to go down. Although there are no guarantees in the real estate market and we do not have that magic ball to predict the future, most experts agree we won't be experiencing another bubble like the one in 2007. However, we must be informed on market trends, consumer behaviors, and expert advice. Connect with us so you can keep up with the latest news in real estate. Give us a call and together we can decide what's the best option for you under your current situation. Bye.